Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day, week update here. Don't really have any trade updates here today, right now, for this strategy of the week update, which I'm simulcasting for strategy of the week and doing a little bit of a live stream here for Facebook as well at the same time. We'll still go over the charts. We're going to go over, spend a good solid 20 minutes here looking at the price action, how things have developed. Is there a trend change now? This last week, we saw a nice uptrend in corn and wheat. Beans was the laggard, and will that continue to be the laggard going forward? We're going to dive into that today. Obviously, down 22 cents there, 21 cents into the close, trading at 12.22 in that January bean. Pretty nasty day. Want to start things off by taking a look at the dollar index. We've looked at this in the past. It's one of those key, global economic indicators that help us gauge where potentially the export markets might be, competing into. 94.33, the highest levels here in a week, pushing towards new highs for November here for the dollar index. Not a great look for our export markets. It might be a reason why we're a little bit lagging here in our export daily flash sales. Now, somehow, though, China did manage to sneak in there over 2 million metric tons of export inspections and 1.8 million metric tons of export sales to the weekly figure, well over trade expectations for the week there in our weekly number. But we've yet to see a real strong purchasing that pushes flash sales, those overnight or that daily number above the 100,000 metric ton threshold that have to get reported. We haven't seen those sales come through in a big way like we did last year. They really splashed the export potential last year in a real way at this time of year. That was a big reason I think we saw a trend set in and set up for the soybeans going into the new year. And a big reason we found a harvest low around this time of year. This year, we're obviously having a little bit more of a competition because of our higher prices. Beans aren't at a $3 discount like they were last year, below $10. Now we're talking about $12 beans. We're selling off from the beans in the teens mentality. And the question remains if soybeans even want to remain up here to begin with. So the dollar index, though, pushing higher here today. Is this setting into a trend higher for the dollar? That's something we're going to have to continue to monitor. We're looking at the continuous contract here. You can see we've got an uptrend. We've got a pretty bullish spread out here of our moving averages. You got that the trend line support coming in here. We're heading up into the 50% retracement area right around 96.40. All right, that's a 50% retracement from the 103 highs to the 88.90 lows here on this chart, and that downtrend we had in the dollar in 2020, and now this three wave or this maybe corrective move we're seeing higher. We're looking for resistance, and I've got that old support now, or now as resistance, and that 50% area that starts around the 94.50 area and continues through 96. That's the resistance area. I'm expecting some kind of swing high to form in the dollar, but another push higher wouldn't end anything. So we need to take a look here at the swing from 89.50 through the current high here. Is that complete? That's the question you should be asking yourself. And right now, with the move we've had off of this supportive trend line support, the 55-day moving average at 93.40, it looks like the dollar's support has held and is pushing to a new high, which very likely means some of our export markets are coming under pressure. Let's take a look now at some of our daily charts. I guess let's start with corn. No, let's start with soybeans. We'll start with the odd man out, or the elephant in the room for this week, but certainly the odd man out of the whole rally over the last week. Not to say prices didn't head higher, well, until today, but we certainly didn't see the supportive price action we saw in wheat and corn in the soybeans. So after we slipped below that 200-day moving average here, for January soybeans here at 12.92, I'm really expecting, would like to see a move back up there to test it now as resistance. We're still below trendline resistance, and this is a big reason why I've been fearful. I've been fearful this last week of a move lower if we couldn't break out of these trend lines. And here we go, right? Markets don't sit still. They'll resolve themselves one way or the other. If it can't go up, it's got to go down. And that's exactly the type of price action we saw today. Something else that concerned me was this very, very overbought situation we've had in the daily RSI for soybeans over the last couple weeks. In fact, since the last week of October, all the way through this first week of November, we've been overbought here in soybeans until today. So we have finally unwound that on our daily RSI. This pullback, it represents a bit of capitulation against that. And now that we've pulled back, if this market starts to become oversold at all, but certainly has removed itself from an overbought condition, it can sometimes relieve the market and allow it then to push through a level on its next push if it gets up there. We're certainly in a multi-day downtrend now. That's 3 days lower of lower lows and lower highs. This marks the second day of that price action, certainly the third lower day off of the high we recently had. But over the last week or so, we've had a lot of inside price action and a lot of consolidation that built up some potential energy in a break. This was a stop run. If you're still long this market, you're holding with some pretty big conviction that we're going higher, because obviously the market dropped today 40 cents from where we were yesterday, and you must have some pretty big conviction that we're going to go higher. But it did definitely weed out all the weaker conviction in this market. We're now below that 18-day moving average. That doesn't sit well with me. I would not want to remain below that 18-day moving average for very long. I would expect us to snap back above that if we are going to trend higher here. But we'll see what happens here. Let's take a look at that 4-hour chart and kind of dial down the situation here a little bit for soybeans. And then we'll take a look at corn and wheat, which is I think a very different conversation to be had at this point than what we're seeing in the soybean market. All right, so that trend line against the highs, cluster of them between 1260 and 1280 that we definitely ran into as resistance. No shock there. They're resistance until they're not. The trend line support, though, that we were holding, against lows here from October 18th through the lows on the 20th, coming up and through the market through the final week of October there, and then arguably consolidation in the last 24 hours that then led to today's push through, was broken today. Okay, that's fine. We're still coming down and into that 50 to 61.8 line, the original 50% that soybeans had held from its 11.95 lows of October through the that late in the month of October high at 12.58.75. We had a bit of a pullback there into 12.30 that held that holding. 50% holding pushed us up into that trendline resistance. That trendline resistance failed the market to be able to break out towards its technical targets and break out, to make a trend move higher if it had moved up towards either this negative 23 or negative 61. The market didn't do that. It broke back down for another test of that supportive area. And, you could make a case. You could make a case, too, of some kind of trendline support potentially coming in here too, if you were to extend this, out to one of our prior lows here, right? The trend line here to the 11.95 low. One of these lows through here, you could make a case how the market's pulled back into that level. That's not a reason I'd buy it. It would just be an interesting reason later that if it holds, we'll use as a supportive reason. But a day like today, it's pretty hard to buy this market on a dip like this. And of course, at this point, if you're not already long, that's a big reason why I want to take a step back before initiating new trades here in a strategy of the week update. I really want to come out here with a fresh perspective and another idea. So there'll be an update for everybody who is watching this video. There'll be an update here later today for all the strategy of the week subscribers, which you can, of course, subscribe in the links below and in the comment section of this video. Sign up there. I'll be sending out a link to another video where I'll be going into some trade ideas of, after I've now let this price action set in, after we've looked at now what I think technically is going on in the charts, and we've had a bit of a discussion now on what some of the fundamentals, factors that are driving this market. that second video here coming out today will actually have some of the trade ideas that I think we'll look at going forward. Up until this point, right, we've been in mainly call spreads. Over the last week, I was looking for that harvest low to have been forming. Not last week, but the last couple of weeks, that harvest low had been forming in these markets. We are looking at longs and call spreads, switching the hat from being shorts, going into that breakdown we saw into the October WASD. Now that we found a low, I was expecting a harvest low to be forming, and we've been building into call spreads and talking about those ideas. Well, I think a day like today is a great reason to be getting into a trade like a call spread in the soybeans. You know, now the 1260, 1360 call spread goes for a value that is worth buying into. Last week, it was worth going into the money, and that was a call spread that we were looking at back in the middle of October and talking about in our strategy of the week updates. That was one of those first trades we were looking at. You know, as the market starts to reverse, this is how we can capture it. Well, now those that got into the spread back then have lost time value. That 1360 call has now maybe lost enough time value and intrinsic value on this drop that we can buy that back, for the 3-4 pennies and take that money into the account and then just be long the call at this point. But those are all strategies and things those are all very specific to, hey, what do you have on and what are you doing? But the next video I'll be releasing, of course, will have some a little bit more detailed ideas on it. So check that out here later this evening. But with that being said, trading futures involves risk and is not suitable for all investors. And everything I talk about here today and in the video later are not direct trade recommendations, but are just my own opinions. But on the 1 hour chart here for soybeans, pretty big breakdown. I expect to bounce back. Look for that old support now, though, to be resistance. This broken trend line support that I just talked about, if we do get a bounce back, watch out. 1235 to 1240 could be resistance from both a downward sloping trend line against highs to highs of the day, as well as that broken upward sloping trend line that was support over the last couple of weeks. Both of those levels around 1235, 1240 could now be resistance on the way back up. And actually, if we get a bounce, could be resistance for a reason the market to then turn over and head lower, because we can't assume that we're heading lower and have a marketing low here. We had a couple weeks of the market trying to base. Now it's testing that, and if it can't find a footing here and reverse back to test resistance pretty much within the next 48 hours of trading, so like by next Tuesday or something, which, by the way, just happens to be our November WASD report, there's plenty of opportunity for this market to find a low here, whether that means going below $12 for Jan beans or not. That remains to be seen. But don't get me wrong, we're still trying to find that harvest low, and today's price action, I think, is part of that. If we had the exports and the flash sales to back a big fundamental move higher, I think we'd be price rationing a little bit more. But obviously that's not the case. Now, the USDA has every ability to change our mindset and to change the trades mindset next Tuesday. And if they want to, throw a wrench in the gears, they could do so in either direction. So let's be aware of that, right? Be aware. But I can make a pretty good case that today's low and a little bit of sparked reversal. If we see this market snap back and the guy that lost his wallet today comes back to find it, that could be something interesting. But that's a big if, and it's not something that I would necessarily put money at risk on today to try to prove or risk to take in this market. All right, so let's move on to December corn here. We'll have a lot more to say about soybeans as price action develops. I mean, I think it was worth saying something about the 20-cent down day we've had. It doesn't spark a reason to be a trader. If you have to be long or want to get long today, call spreads are good. If you're looking at trying to get short, I think that a bounce here towards 1230 might be an opportunity to do so. Of course, a breakdown to new lows of the month would spark some maybe follow-through selling. But that's, at this point, I think it's if soybeans haven't sparked a conversation with your grain marketing advisor yet, today's price action hopefully has convinced you to do so. So let's move into December corn. And again, guys, more actual ideas will be coming out in that release I do later tonight. Sign up for that Strategy of the Week webinar. If you already are on the mailing list, you'll get a link to obviously this video and that second video I'll do later with some trade ideas. I want to let the analysis set in first before just spitting some ideas out there. Today was a big day. Could have been a game-changing day, again, for the soybeans. We looked at that. Now, corn and wheat, a little bit of a different story, right? Here we have markets that have really set into a trend higher over the last couple weeks. The 3-day pullback we're seeing right now looks like nothing more than a pullback against an otherwise continuing uptrend. Corn has been basing since September versus beans that just based in October. Something I want to point out to everybody, which is very interesting, and if there's a reason I have the two, I kind of left beans up there on the right-hand side, that tiny chart, right, that you can see there in my broadcast on the right-hand side there. The left chart is corn. And what I really want you to pay attention to, and why I feel like there's some similarities on these two charts that we're looking at, even though they're different time frames, is actually down here. And it's the amount of time and what corn did in order for it to base. It based on the September WASD. It had a nice solid rally up, and then had a very hard pullback into the October WASD, where then it found a secondary low, couldn't quite break below $5, and then from there has had a very strong rally, and enough of one to say, okay, maybe that's our harvest low, or at least we're confirming we're going to be holding this range for some period of time, right? Well, soybeans might be kind of doing the same thing, just a little bit of a different, or okay, like 1 month later time frame. October WASD find their capitulating low below the $12 figure, get a nice rally up, have another pullback here into the November WASD, find a bigger base, and then maybe they'll have their big rally after that. Maybe, fingers crossed, they follow that same kind of pattern, but I kind of noticed that here today, and I at least wanted to point that out, that I think there's some similarities to, hey, corn made a low with that September WASD, rallied for half of a month, pulled back into the October WASD a month later, and then had its big rally. And soybeans could be doing the same thing here, right? Only a month later, found their low with the October WASD, rallied up for half a month, then pulled back into the November WASD, and then maybe they'll get there. Excuse me. Well, sorry about that, folks. Glad I was able to mute myself. Otherwise, I've been blasting ears out. Yeah, so interesting to see. Let's see if that holds true and if that's going to be the case. But nevertheless, as I was saying, corn just looks like we are starting to break out. Excuse me, of trying to break out of a trendline resistance here that was against the highs. We're trending higher. We broke above it, and now we're in a 3-day pullback to test that broken resistance, now a support. 18-day moving average is now back above all of our other moving averages. 55-day moving average still down there at 535. 100-day moving average up there at 543. So expecting this 55-day to turn up and get above that 100-day moving average. The 200-day solidly down there at 526 and aligns with now that trend line support against the lows. So very clear $5 mark. December corn and corn in general, very comfortable above $5. I don't think we can complain seeing that, but I also think it's necessary to see that. With currently where input costs are, and what I've been discussing with some clients, I don't think it is. I think corn needs to be closer to $6 just to cover input costs. I'd love to see some comments. We're going to be definitely reaching out on social media to as many people as we can to get some input in terms of what are your input costs looking like per acre for corn this year, or going into next year, I should say. How are they shifting? What are the quotes you're getting? Are you locking it in now? I know that's a bit of a risk to take, but then again, there's also the risk of market going higher. And of course, if you don't have the ability to contract out some of those fertilizer costs and stuff now, you run the risk of just being at the whim of the market by the time that supply comes. So, or the springtime comes, I should say. But either way, corn above pretty much every technical indicator we can see here. Made its first run and rally towards $6, pulling back a little bit here. We are getting to the point where we need to see it hold support. Otherwise, we might run the risk of testing back down into the old range we've been in. This is the type of level that we want to see it hold at. And we'll get into now the 4-hour in the shorter time frame chart here. So we are running out of time, aren't we? But like I said, we'll go over. I'll have some trade ideas in a shorter video I'll put out later tonight. Taking the ideas, the technicals and the fundamentals we're discussing here right now, and turning them into some of my favorite trading strategies. The breadth of the move today, I didn't feel it was appropriate to just whip them out right after the close, considering we had our biggest, finally, a big move in the beans. Wanted to give myself the ability to sit there and honestly digest whether or not I should flip my hat and reverse here, because we are seeing some reversals in things like spring wheat and other places that might make sense, but really these could just all be pullbacks against certain trends. Okay, so channel support here for wheat kind of broke. That doesn't mean that I think we're done going higher. It just means I think we're going higher in this uptrend, and we need to now prove support somewhere. Well, we've pulled back now into trendline support. 50 50% support will be around that 546 area. That's from the 506 low drawn through the 586 high, right? I think we'll have some up and down price action before we find a low here. But just like the beans, just like we were talking about there on the daily chart, broken trendline resistance here. That one major trend line against these three highs here. I think we broke through it. We've now pulled back. We're testing it as support. So I see a lot of support here, 555 through 540 for December corn that could hold and should hold and continue with this market, keep this market higher. That kind of average price of the last several months has been right around this 555 to 560 area. So corn breaking back above those levels, of course, to me represents the market moving back up in the high end of its range, and a range it's been in going back to March. Between $5 and $6. So this calls into question, how high can corn go, and how high in this range does it need to test? I think another push higher towards $6 is not out of the question, but we are certainly into pulling back into levels now that I think are necessary to see support hold. Otherwise, a deeper pullback back into the range we were in before, below 550, but above $5 could be the case for corn. So last but not least here today, maybe let's, I was going to say maybe I'll take a look at spring wheat, but nah, I don't want to overcomplicate things. Chicago wheat, though, 773 3/4 into the end of the day. Something, though, I do want to point out, if you look at corn, wheat, and beans, going back to our bean chart real quick, look at the RSI. We talked about this already, but the RSI on that bean chart, it'll flip here in a second. I guess it wouldn't have. I didn't click it. You can see, remember the RSI here, very overbought. It has rolled back over, come off a little bit. December corn, same way, very overbought condition, has pulled back a little bit. Look at December corn back here, back in September through October. Very overbought condition, needed a little bit of a sell-off, right? No new low, but had that little bit of a sell-off to reset its RSI, and even got oversold there. Well, hey, maybe that's what beans will do. Beans are in that same formation. If this is that first formation that we saw in corn, right? If that's here, it means beans are at or nearing their low, and over the next couple days, maybe into WASD next week, like I mentioned, we find a low. If today wasn't it. That oversold condition kicks in, or at very least, we just see a bottom in that RSI fill. We'll see. If we follow through, obviously beans could go a lot lower because we're nowhere near oversold condition just yet. We're just coming out of that overbought condition. But again, in the Chicago wheat, the same variation here. A little bit of an overbought condition. The pullback these last 3 days has reset that. That to me allows this trend for wheat to actually continue higher. You can draw a lot of trend lines on this chart, and there's a lot of support. I mean, a rainbow of moving averages: 690 for the 200-day, 714 for the 100-day, 732 for the 55-day, 755 for the 18-day moving average. Just a beautiful breakout chart happening here for wheat. But this pullback again needs to hold support here soon to keep this trend higher. Otherwise, we'll be pulling back into these indicators as charts usually do. And certainly trend line support here at this point would come in around that 18-day moving average around 755, the most aggressive. Larger trend line support, if you go back on the chart here, more around the 200-day moving average around $7. But if we continue higher, the real question is, and the one reason I was kind of wanting to look at Minneapolis wheat, well, how high can Chicago wheat go? Can it get to $10? I mean, it could do up and down all the way up here, much like, another chart we saw that did it. Minneapolis spring wheat. If we go back and look at a chart of Minneapolis spring wheat as it was breaking above $8 here, that chart's not so different than what we saw and what we look at right now in actually Chicago wheat, and then it just explodes higher. I'm not suggesting Chicago wheat will do this. I'm just saying it's totally possible. When that looks very similar to that spring wheat chart, the only difference is spring wheat then went, basically went straight up towards $10 from here. So again, if that's going to be the case, we need to see support come in soon. This parabolic turn, we need to see trend line support hold, see this fanning out of our moving averages continue, and certainly need to start holding above these old highs around the 760 to 770 area. We need to get back above $8 and kind of stay there. But for right now, we'll see what happens. Let's break down that 4-hour chart for Chicago wheat. Again, in the very short time frame, there's a kind of like since the start, or mid-October, I should say, there's been a trend line through the lows here. Which we're coming down into at first test of, I mentioned. We failed to hold some of the more aggressive, supportive fibs, but that's okay. We've got a very big supportive area from this broken trendline resistance that, drawn from our old 785 high through the highs there at 760. We broke through here at 766, held it probably on a pullback. This congestion around 750 and the breakout thereof was probably a test and breakout of this trend line. A pullback towards 750 would probably correlate with the full 50% retracement. Again, that's around 742. And this broken trend line resistance now is support. So some good trend line support here at 770, again at 750, 740. We'll see if we get that kind of support coming in on this chart. But the 3-day pullback for both corn and wheat, if that's all she wrote and these markets continue the highs, maybe we'll consider them the leaders here into this next round. But I would love to see the beans pick up pace and now be the leader off the lows, while these markets become a little tamer. Certainly continue higher, but beans need to maybe play a little catch up when we consider where that bean to corn ratio is right now. But markets can stay liquid a lot longer than we can stay solvent, or irrational longer than we can stay solvent. So with all that being said, everybody, look out for the next report coming out in a little bit here later today. Sign up for the Strategy of the Week webinar in the links in the comment section and in the info section from this video. You'll get added to the mailing list to get both the recording of this video, as well as a link to the recording of this video, as well as a link to a recording of a video I will be doing that will include some trade ideas to utilize some option strategies in the market here. Wanted again to kind of mull over the charts, put out a strategy idea, a strategy video, look at some of the developments of price action today. Soybeans being a significant mover and one to not ignore. Kind of digest whether or not this type of move changes the whole dynamic of we thinking that the formulation of a harvest low here. We're able to compare it to kind of how corn found its low from a one WASD to another before really finding its move, which if beans follow the same kind of dynamic, which would mean that the second and third week of November for soybeans could be exceedingly bullish, but we'll see if that price pattern continues. So sign up for those for that video and that webinar. You can also click to sign up or get into our mailing list for our daily newsletter, where we can get our entire team's commentary of current market conditions and all that good stuff. Feel free to give me a call over here at Zaner at 312-277-0110. Always looking to have a conversation about the markets. Love to turn some of these action ideas into actual trading strategies and do an account with you over here at Zaner. So give us a call. Have a great day, everybody. Have a happy weekend in case we don't talk to you before then. Just happy trading, safe trading. Watch out for the volatility. It's picking up here, and we got WASD coming in next week. So it's going to certainly keep things moving. Have a good one, everybody, and we'll be back with you as price action develops. Take care.